Good afternoon, welcome to GrainTV. It's November 18th, 2013. I'm Logan Burgess. To my right here is Brock Shimbino to help break down kind of a mixed trade to start off the week on a Monday. Jumping into fire tip here, we see December corn down 10 cents. January soybeans picking up 7 cents. Chicago wheat was off 2 1/4. Kansas City wheat off 4 1/4. As I said, kind of a mixed trade. Seemed like we had a technical bounce in soybeans. Certainly the bears are still in control of this corn market. We did just get the crop progress numbers here just a moment ago. 91% of U.S. corn is now harvested, 95% of soybeans harvested. Those were right in line with trade expectations, so not a lot to drive the market going into the overnight session from that report. One thing we did see was that the good to excellent rating slipped 2% for the winter wheat crop, now sitting at 63%. Certainly, though, a pretty good showing there for winter wheat at this time in the marketing year. Bottom line, not a lot to drive the trade here into the overnight session. The trade really is going to start being focused on the demand side and South American production here moving forward. One big demand side number that we did get out today was the export inspections report. Brock, it seemed like they were relatively supportive from what we saw.
You know, they were very good export inspections this week. All three commodities, wheat, corn, and soybeans, all beat analysts' expectations. If we take a look at the numbers, wheat came in at about 18 million bushels exported last week. Corn came in at about 30 million bushels, and soybeans had a pretty large number there, 87 million bushels exported. You know, if you take a look at where that leaves us for this marketing year, you can see here on this chart that we've been following this marketing year. The green line is the actual seasonal pace to meet the current USDA projections. The red bars are what we're seeing for exports. This just happens to be the corn chart. You can see over the last 4 or 5 weeks, we've really been beating the seasonal pace to meet those current USDA projections. Yep. On the year, that leaves us about 18 million bushels behind. So we are just a little bit behind, but we're catching up rather quickly to that seasonal pace. Soybeans, a little bit of a different story. We continue to have very good exports leaving the country, especially over the last 8 to 10 weeks or so. And really, that leaves us about 119 million bushels ahead of pace to meet the current USDA projections. So very strong showing out of soybeans once again. Yep. That was kind of expected, but even with the high expectations, we even beat those. So that did put a little bit of a support into the soybean markets, I believe. But mostly like what you were saying, Logan, I think what we saw in soybeans today was a little bit of a technical bounce after we had that sharp sell-off on Friday.
Yeah, certainly. We really saw soybeans take a beating there on Friday. We talked about that a little bit on GrainTV here. We saw technical weakness out of beans. It was a little bit overbought there coming into Thursday's trade, and we really saw the bottom fall out of the cash market. So we're going to have to see how the cash market here responds, but certainly it seemed like we had a little bit of a technical bounce in soybeans. If we just look at the action in the corn market here today, we did have a story that the Chinese actually rejected a U.S. shipment of corn there today. I don't think that was one of the major stories that was pressuring this market lower. Certainly seems like uncertainty about ethanol production here in the upcoming or in the 2014 production year, and just some technical weakness is what we saw in corn. Certainly, we saw after the November 8th USDA WASDE report, we had 2 days of positive price action, but you can see here from the chart, really following that, we've sold off quite sharply, and today we saw it. Once we got through the lows that we printed on November 8th, the bottom kind of fell out of this market. So it looks like here at this point, we're certainly still in a bear market. Lower highs, lower lows, and the next stop in my mind, maybe $4 a bushel. What do you think, Brock?
I think I'm right there with you. The contract lows for this December contract is actually 401, so I think we will go down and test that. Keep in mind today we did see March, May, and July all hit new contract lows for next year. So December of this year was the only one to miss on those contract lows. So I think we will go down and retest that. We are at multi-year lows at this point. We haven't seen these prices since 2010. So I don't put it out of the question to definitely go down and test that $4 level, test those contract lows right around 401 or so.
Yeah, certainly. If we look at the numbers that we got Friday from in the Commitment of Traders report, right now we know that funds are extremely net short corn. So you and I were talking about it a little bit. That does present a situation where we could see a bit of a short covering rally as we come into the first notice day for this December contract. So we'll need to keep an eye on that. But right now, it really seems like the bears are in control of this market. It doesn't seem like there's enough demand side numbers to really prop things up here at the moment, especially when you consider that uncertainty about 2014 ethanol production. We'll have to see if we get more firm demand side numbers here this week. As always, we'll be getting EIA ethanol numbers out on Wednesday and export sales on Thursday. We'll help keep you posted on both those here on GrainTV. In general, though, that's what we saw here for a Monday in the grain market. A little bit of a bounce back in soybeans. We'll see if it can keep it up tomorrow. Keep an eye on corn there. Certainly a very poor showing today from a technical aspect. As I said, we'll see if we can see a little bit of a turnaround Tuesday there in the grains. Thanks for joining us here on Grain TV. We'll see you then.